right? The financials, revenue. And with that, we present you with information so that our viewers, with this informed knowledge, whenever there is an investment opportunity, you can take an informed decision. In the couple of episodes, prior to this, usually what we have done is we have done a recording. Then we have hosted it online for viewers to see and gather knowledge about the companies. But this episode is truly special, and so we wanted to do it live. You see, the reason is in India, there are thousands of good quality companies, and then there are hundreds of great companies. But then there are just a few very large enterprises, right, who are market leaders in all dimensions. These are the entities that sit at the top of the value chain of the economy and can drive a large impact across the country. So it's my great delight today to have this opportunity of having a discussion with a leader from none other than the OG from the Indian market, Adani Enterprises. Ladies and gentlemen, it's my sheer pleasure to have with us Mr. Saurabh Shah, who is the Deputy Chief Financial Officer at Adani Enterprises. Mr. Shah has got a rich experience of 16 years at Adani Enterprises, where he has looked across multiple disciplines ranging from finance and control, treasury management, corporate governance, just to name a few. We also have with us Mr. Pranav Inamdar, who is the Director of Trust Group and Trust Securities Limited. Pranav has got 2 decades of deep experience, leadership experience in debt structuring and debt mobilization for some of the largest entities in our country. Saurabh, Pranav, a very warm welcome to both of you on this discussion today.
Thank you so
Thank you,
much.
Abhijit. Thank you.
So I think let's get started with some very basic question first. I think the name Adani is known across the length and breadth of the country. But I think very few people would know the depth of this enterprise, right? How big it is and what does it stand for, right? So, sort of my first question to you is, in lucid terms for our viewers, if you can give a perspective of what Adani Enterprises stands for. Is it a conglomerate? It is, geographically located across multiple countries, right? Just a brief view around how we should look at Adani Enterprises as a market leader.
So, thank you so much, Abhijit. See, from an Adani enterprise perspective, it will always be an incubator for on behalf of the Adani portfolio. Adani portfolio is an infrastructure portfolio where we have energy and utility basket, which is a very big basket within the businesses. And then we have transport and logistics basket. Adani Enterprises follows that same philosophy when it incubates new businesses, be it in past when there were businesses like Adani Ports, Power, Transmission, which is Adani Energy Solutions now, Adani Gas, Adani Green Energy. All these businesses were incubated at Adani Enterprises in the energy and utility as well as the transport and logistics basket. Now there are new businesses which are being incubated at Adani Enterprises within the same philosophy, where in the energy and utility, we are incubating the green hydrogen ecosystem. We are incubating data centers, water, and we are also incubating businesses in transport and logistics side like airports and roads. Why this incubation? Basically, Indian economy with the kind of consumer base, the GDP, the requirement of energy, which is right now being sustained through various fossil-based fuels. We require, we look at it from that aspect that Indian economy requires what from an infrastructure perspective. So it requires more and more infrastructure investments, a more efficient infrastructure in terms of transport. We are building these efficient airports and roads. In terms of energy, we are making India self-sufficient by bringing in green energy as well as the green hydrogen business. So that's where Adani Enterprises. Along with this, we also have certain primary businesses, primary industry businesses, which are into the current requirements of energy for India. So let's say today Indian industries still require a certain amount of resource in form of coal. So we are ensuring that that is provided to the customers at the end point. We are also doing services in form of mining services. We are also having certain commercial mines outside India also, where we source coal there from there to various
Got
countries.
it. Got it.
So all in all, we ensure energy efficiency for the country in that
Okay,
sense.
okay. So I think a great term that we learned, Adani Enterprises is an incubator. In a way, if we look at it, just like there are incubators that incubate startup ideas, right, and take them, ahead. This is a great concept, which I think, is seeded in the Adani Enterprises as well. So let me take a step back from here and try to understand when was Adani Enterprises formed? Little bit of background about the promoters and what was a vision around setting such an incubator structure. Because I'll tell you, this is a very unique structure, right? And sounds, I mean, a very new kind of novel concept. So, would want to understand what is the vision behind creating this incubator kind of a model.
So, see, Adani Enterprise started out in 1994,
1994.
and the IPO, yeah. So the company as such was formed in 1988, but the IPO came out in 1994 at 150 rupees per share. To on as on June this year, it is, if you had hold that share, it would have been about 8 lakh rupees. So that's about a CAGR of about 33% that you have got in that company as a stakeholder or a shareholder.
Right,
Now, the vision for us is basically to treat it as an incubator. As I said, that we want to build things for the Indian infrastructure efficiencies and to create more and more infrastructure portfolio businesses within the country. And to that end, whether it be an adjacency to the infrastructure which uses more power in form of, let's say, a copper or a PVC business, or if it is a cement business which becomes a backward integration to the infrastructure,
right,
so then those businesses come into the portfolio of Adani Group. Same way, Adani Enterprises, when it incubates businesses, it ensures that it is hitting some form or the other in terms of where the Indian economy is growing towards. So even doing a defense business, basically that incubation is being done at Adani Enterprises to ensure that we are Atmanirbhar in what the government's philosophy
right.
towards that is. Similarly, solar manufacturing or wind manufacturing that we do, it's also in that same vein where we want to ensure that we are not net importers in the country. We are basically reducing the import. We are going backward integration right from cell, module, ingot, wafers. The reason for doing that is that we reduce the import requirement of the company and country and make it self-sufficient. So that's the main aim of being an incubator and doing this business in this form.
Got it. Got it. And how about the promoters?
So, see, we have the principal sponsor, Mr. Gautam Adani, who heads as the chairman of the company, and Mr. Rajesh Adani is the managing director, who is the brother of Mr. Gautam Adani. We have various leaders in form of the generation two of the promoter family within the various businesses, right from Mr. Karan Adani to Mr. Jeet Adani, Mr. Sagar Adani, and Mr. Pranav Adani. So all the family are involved in various businesses within the group.
Got it. Got it. Fantastic. So if I just quickly summarize for our viewers, so Adani Enterprises is an incubator, and the primary thesis around this is basically building up the infrastructure, and for that, whatever is needed for, to build up the infrastructure, I mean, infrastructure component would be ports, would be airports. Right now, to build that, you would need cement, you would need copper, you would need to power those movement, right, on infrastructure, you would need energy. You think the length and breadth of all the components that make up this entire value chain that is being powered by Adani Enterprises, the various companies incubated by Adani
So
Enterprises.
some of them were incubated in past. Now we don't hold them in our
Okay.
portfolio, like
Okay.
ports and green and power and thermal, all these businesses were at some point in Adani Enterprises. Now they are separate listed
Separate
verticals
entities.
running on their own right. We never have cross holdings. In Adani Enterprise today, as part of listed vertical, we have only Adani Wilmar, which is 44% joint venture with Wilmar International, the Singapore group, and we have NDTV. So rest of the businesses are directly held by the promoter family in their own right. Yeah.
Okay.
And
What was the
with the
second?
minority share.
What one is Adani Wilmar. The second entity's name, what did you mention?
NDTV, which is the
NDTV.
media business. Yeah.
Got it.
Yeah.
Got it. Okay. Now, the next question, we'll just go slightly deeper into the overall business model. We understood that, how is the structure overall? And the next question would be like, because you have got multiple companies that you're incubating, and I'm sure you will keep on incubating more as you go ahead, right? So, how do you set up the strategy at the top level as well as, I don't know, maybe at the individual company levels also, right? Wherein each of them are able to have a very positive impact on the overall group and they're able to mature, wherein finally they become self-sufficient, can move out on their own to operate on their own outside the Adani Enterprises ambit, right? So, how does the strategy work over here?
So, see, each business has its own individual strategy. So, be it airports, airports is today, let's say, looking at how to develop the overall the airports that we have incubated. In the sense, Navi Mumbai, which is a greenfield project,
Right.
how that is coming up. So that will be, there is a strategy for how that entire greenfield development of that airport will take place. The other six airports which were won by Adani Enterprises through Adani Airport Holdings, which is the holding company for airports, where they are brownfield, but there was a need for further efficient development in those airports. Similarly, Mumbai Airport, there it has its own bottleneck because of the only one runway that it has.
Yeah.
So how do you manage, bring about more and more capacity and efficiencies within that airport? So each business, similarly like roads, how that development should take place. In that, the strategy is we should have a mix of businesses which are having certain amount of fixed returns as well as certain amount of traffic risk. So we build the ham model we use, which is the hybrid annuity model, to ensure that that business has a certain amount of minimum fixed return that it gets, which is about 15-16%. And then for about 70% of the portfolio within roads, we take the traffic risk also, which is BOT and TOT model, build, operate, transfer, and toll, operate, transfer. So
Right.
there we toll the entire road for a period of 15-20 years. So each business has its own strategy for its development as well as execution as well as profitability. Similarly, for new green hydrogen ecosystem, if we talk about, so green hydrogen ecosystem has its strategy towards building how we can get to the lowest cost of green hydrogen over a period of time. So right now we are into the manufacturing ecosystem business, where we have 4 gigawatt of cell module lines, 1 gigawatt, 1.5 gigawatt of wind turbines. So
Right.
these businesses right now are in the manufacturing side. They will move towards renewable generation, then green hydrogen generation, and then to downstream products. So similar, every business has its own strategy, separate independent verticals. They are separate CEOs for each business, and thereby the strategy is driven, and then it finally rolls into Adani Enterprise currently, where Adani Enterprise ensures that each business has enough liquidity, enough equity that it can provide. They can develop at a scale, and once they reach a certain amount of scale and they are fully matured, we then demerge them like we have done in past, and then that gives value to the stakeholders. So
Got
that's
it.
the overall strategy at the Adani Enterprise level.
Got it. So it's pretty much a decentralized strategy wherein each of the company is responsible to come up with their own roadmap around the budgeting. It's presented to the Adani Enterprises board held by Mr. Rajesh Adani, and then post
And
approved the
Mr.
company.
Gautam Adani. Yeah.
Right. So, one quick question on the numbers. So, as of today, Adani Enterprises would have how many companies that it is incubating?
So, see, from a vertical perspective, as I said, there are
Yeah,
companies, of
vertical
course, big
perspective
number of
also.
companies. So, from a
Hmm.
vertical perspective, as I said, there are three businesses into the energy and utility business, which is green hydrogen, data center, and water. There are two businesses which we are incubating under airports and roads under the transport and logistics vertical. There are businesses in primary industry, which is integrated resource management, where we do end-to-end logistics as one business. Then MDO services is the next business. Then
Got
we
it.
have commercial mining as the third business under the primary industry vertical. We are also incubating two businesses under the primary industry vertical, which is copper and PVC. And then there are direct to consumer businesses, which is Adani Wilmar, NDTV, which is the media business, as well as the business of digital. So where
Right.
it is still under a very basic phase where we have a super app where we are developing the digital business. And last but not the least, we have specialized manufacturing in form of defense.
Got it.
So that these are the some of the businesses that Adani Enterprise is either incubating or operating in the current
Got it.
setup.
Got it. My next question would be, each of them are in diverse industry segments. And if I look at each industry segment, there are competitors who are there, each of them. I mean, I have seen companies which are in one sector and they have got competitors. So they have a strategy. How do you stay ahead of the competition? But here it is like multiple industry segments, though they might be slightly adjacent. Nonetheless, they're distinct industry segments wherein there are other competitors also, right? So, it would be very interesting to understand how do you build that philosophy of, always being the market leader over here? What is it that you imbibe in these companies, right, that you're incubating, which helps them always remain ahead of the curve, right? And, ahead of the competition as well.
So there are two things which we take into account when we build any business. One is the execution risk or the execution capability that we have. And the second thing is capital management. So these two things plus then the employee related and the artificial intelligence related inputs that we also have as enablers. These are some of the things which really make up our businesses. So in terms of execution, we have in past shown that we can execute very, very large scale projects. Currently, with Navi Mumbai at Adani Enterprise, we are showcasing how a greenfield project can be up and running in a period of 2 to 3 years kind of level. Similarly, from a capital management standpoint, we ensure that because this is an infrastructure business, we have a long gestation period. The concessions period are also of very large tenure. So thereby we ensure that with that kind of an asset, our debt are also of long-term nature. So we generally and that debt, other than the NCD that we are right now coming up with, every kind of capital management is built in. So if there is certain amount of debt which is required for long term, it will be taken in form of a long term debt, be it a project finance or foreign bonds, which has a long maturity or such other. There are working capital requirements of certain businesses which we ensure through various banking and financial institution sources. So each capital management plan is something which we focus on to ensure that there is no liquidity risk that the business has, no maturity risk that it has. And the third thing which I said is project execution, where we have a very, very strong project execution team to ensure that no project in Adani portfolio or Adani Enterprises ever has to go for any kind of any kind of this thing where it says that it will take time to execute the project. So
Got
from
it.
that aspect, it's an important aspect for us in terms of how we build our businesses.
Got it. Got it. I think those are great pearls of wisdom. Today, live on our call, we have got viewers, and once we put this online, right, there'll be more viewers, and a lot of them would be already having their startups or running their businesses, right? So this is a great learning for them. Also, two specific points that you mentioned that I personally took away. One is great capital management plan, and second is a very tightly knit project execution. That put in together with the team capability is what actually fuels a company to go to great heights. Great. Now we will try and understand, now with respect to the financial parameters. So if I may ask, what has been the revenue, of Adani Enterprises for the past 3 years? How has it grown? What has been the profit after tax for the past 3 years, right? If you can, share those numbers with the viewers.
Right. So see, from an EBITDA perspective, we have in the past 3 years grown at more than 70% of CAGR. So current year, last year we closed the EBITDA at 12,327 crores, 13,237 crores was the EBITDA for last year, which was a growth
By
of
24,
32% over previous year. Yes, and there is the CAGR, as I said, is of 70% over
70%.
the last year. So FY22 was 4,570 crores, FY23 was 10,000 crores, and FY24 is 13,237 crores. We look at our businesses from an EBITDA standpoint, more from an EBITDA standpoint, because it being an infrastructure there are other businesses which are adjacency to it. So there are depreciations and all that, which for an infrastructure would not be the correct
Correct.
way of looking at. So PAT
Correct.
is something which we do not look at it very, very minutely. Yes, we do look at interest costs, where we ensure that they are in line with how we want the development. So on an average, it would be not more than about 9 to 10%. That's what we are currently looking at.
Got
So
it.
that's on the revenue line is all dependent, because there is a sizable amount of trading which we do. So that is the in IRM business that we have, where we bring in the resource from outside, that is coal, and then supply to various end consumers. So there the volume, because of the volume and pricing of coal in the market, the
Right.
revenue may go up and down depending on how the coal prices move, which went up and down very, very fast in the year 23, 24, and
Correct.
22, 23. So revenue is something which is not a very, very, very important aspect for us in terms of understanding. But yes, EBITDA is something which we track. We also look at our net debt to EBITDA in a very, very strict sense, which is one of the main covenants that we have as our credit matrices.
Yeah.
Since this is an NCD questionnaire, so I would of course have to inform that our net debt to EBITDA is about 2.3 levels currently. And in fact, our EBIT debt to equity also ranges a bit below 1 as of now. On a standalone basis, it is much below 1, and on a consolidated basis also it is below 1, and about 0.7 is what we currently have as the debt to equity ratio. So there is a huge leverage opportunity also available for the capex, kind of capex that we
Right.
are going to do in future.
Right. So moving ahead, given there are these diverse businesses, next question that automatically comes up is, how do you decide upon apportioning funding to each of these businesses, right? What is the thought process that goes in over here? And if I may ask, because we are on this hot topic of NCDs, right? So how would this NCD also play a role in empowering this group of companies?
Yes. So see, our incubation model is mainly focused on the infrastructure. So energy and utility and transport and logistics is where the maximum amount of funding will be done, including for this NCD.
Got it.
So we are into the phase of development in green hydrogen, data center, roads and airports. So this is where the major funding will go towards, be it from the NCD as well as other sources. We, for us in this NCD issuance, we had already given a certain amount of loans from the standalone entity to this subsidiaries, which we have in terms of airports, roads, data center, and green hydrogen. So some of them there will be a sort of a repayment towards those loans which were
Okay.
taken earlier, and ensure that there is a little bit more elongated maturity. And along with that, there will be, as a general corporate purpose, when we say we will be using these funds for these businesses as a short-term gap arrangements for these businesses.
Got it. Got it. What are the key growth drivers, as an incubator, when you look at in totality, right? There would be certain growth drivers, levers that you would want to strongly play upon, which is coming in maybe because our Indian economy is doing well, global economic parameters are changing in favor of us, or it can be very internal, certain things, key things that you're doing very well, which you want to double down upon, right? Which helps you in scaling up much faster. So, not to take a very long-term view, let's say for the next 3 to 5 years, what would be those key growth levers that you're going to focus on? And that does it also entail going into other geographies or any other adjacent, business segments for scale up?
So see, currently the growth levers, as I had mentioned in my opening comments, that we look at like from an airport or let's say a road business, which is being incubated. The growth levers are the growing consumer base of the country. So
Right.
that becomes a
Right.
growth lever for us.
Correct.
The GDP is growing. We are into some of the states in the airport business, which are the
Right.
fastest growing states in even
Correct.
within India.
Correct.
So that way it is going to be a growth lever for us. From a roads perspective, logistics business does require a lot of more efficiencies to come in. So road business becomes a, from
Yeah.
a that perspective, logistics policy becomes a growth lever for us.
Correct.
From a any manufacturing that we are doing within the country, the growth is basically how we can make India more atmanirbhar,
Hmm.
reduce the current account deficit for the country. So those kind of major points become the growth lever for us in terms of how we look at the all these businesses within Adani Enterprises.
Got it. Got it. Now let's try and understand about the debt management and the funding of the company, right? So what would be the current debt levels that Adani Enterprise would have, and how is that being managed?
So see, currently we have on the consolidated basis 50,000 crores of debt, out of which 12,000 crores is from the promoters. So on an external debt basis, we have 38,000 crore of debt.
Got it.
We carry a cash and bank balance of about 6 to 7,000 crores on our balance sheet. On a standalone basis, where the NCD is being taken, it is about 4,000 crores of debt, and we carry a cash balance of about 500 crores. And within that also, there is about 500 crores of promoter debt. So that's how the current debt is structured. In terms of your second question as to how it is managed, we see from a perspective of maturity, we try to keep on elongating the maturity, as I said, which ensures that there is enough liquidity available. We have our interest coverage and debt service coverage ratios are also very, very healthy. We at standalone level, they tend to be about 5, 6, 8 times kind of level. On a console basis,
Wow.
also about 3 to 3 times of the in terms of both debt service as well as interest coverage. So we ensure that, and even as I said, net debt to EBITDA, we look at that as a very major covenant. So all these are in a very healthy state, and we continue to keep them there where because of our growth phase that we have.
Got it. Got it. And now from the funding side, beyond this NCD that is there, right? Do you also look at other sources of funding which can help infuse capital, right?
100%. See, for as I said, there are capital management programs for each business separately.
Hmm.
So for an airport business, they already have a certain mix of foreign debt, domestic debt in terms of project finance, and also certain other working capital resources. Similarly, for each business, there is a overall capital management plan at each business level. So it is a mix of international market, domestic market, equity issuances, as well as public issue market. This NCD also is being done with the aim to deepen the public debt Indian market, where we want to have because very few corporates are still tapping this market. We want to ensure that we have a sizable growth and potential to develop this market, and that's why these NCDs are being looked at. Abhijit, you are on mute, I think.
Sorry. So I think now let's move on to the most exciting part about the upcoming NCD IPO issuance. So I will direct that question to Pranav. So Pranav, Trust
Sure.
is the lead arranger for this NCD IPO issue. If you could share with us what has been your thesis around this engagement, which got you this confidence to take this forward. If you can share your perspective, please.
So at Trust, Abhijit, we have been at the forefront of, engaging ourselves in not only just DCM activities, but also uh, reaching out to our customers, both on the issuer side and investor side, and trying to get them the best that the market has to offer. And nothing can beat than a brand, as you started your this webinar with the comment that nothing can beat a marquee name like an Adani. So we have been in touch with the group trying to work out something, and IPO seemed to be the best way where we can reach out to people. People can take advantage of the fantastic interest rates and coupons that they are offering, the different maturity baskets they are offering. At the same time, the company is also getting one form of a channel to engage with its customers in terms of investors of their NCD.
Got
So,
it.
Abhijit, I would appreciate if we can just run through the NCD structure once
Yeah, yeah.
for our
That would
benefit
be
of our
that was
viewers.
my
Yeah,
next question, so that all our viewers and investors becomes aware. If you can go through the NCD structure, the rating, the coupon rates, and the payment frequencies, that will be great.
yeah, perfect. So, okay. So, if I'm able to share my screen, it will be
Sure,
great,
sure,
Abhijit.
sure. So let me try and Pranav, would you try now?
Yeah,
I
I'll try.
just
Perfect.
Yes,
So as you can see that I hope everybody is able to view this.
it is visible.
So yeah, so Adani Enterprises is coming out with its maiden NCD public issue. It's opening on September 4, which is tomorrow, Wednesday,
Got it.
uh,
Yeah.
2024, with a closing on 17 September 2024. There is an option to close the issue earlier if the amount garnered is garnered at an earlier date. The NCDs are of face value of 1,000 rupees, where you have to minimum application is for 10 NCDs, which is 10,000 rupees, and then subsequently in multiples of one NCD, so 1,000. So it's a very, very approachable deal wherein anybody with a 10,000 rupees can also become a part of this great public issue. The issue is,
And
of
people
course,
can invest through UPI.
yes, yes, yes,
Yeah.
yes.
That is the
It's
biggest, advantage. People can
yes,
now
yes,
leverage, take advantage of this great issuance using just a tap of their, phone using the API payment route.
exactly, exactly. So we also have that these are rated Care A plus with a positive outlook. The
Care
issue
A
size is
plus. Okay.
A plus with a positive outlook.
With positive outlook. Okay.
Yes. And the base issue is 400 crores with an option to retain over subscription of another 400 crores, aggregating 800 crores.
Okay.
And they have offered, if you see, they have offered different maturity baskets and the investment options, wherein can have 24 months, 36 months, or a 60-month based on your
Right. Right.
investment profile. At the same time, you can also have a annual, cumulative, or a quarterly option. So this works very well for all retail individuals. Of course, individuals and HUFs applying through their Karta.
Hmm. And these are, I presume, these are secured bonds.
These are secured, rated, non-convertible, redeemable, non-convertible debentures, and they are proposed to be listed on both BSE and NSE. So there is ample liquidity for the investors. So
Right.
see, so many times people may not want to buy, sell when they've got such prized possessions. But then, every now and then, if you see a price coming up on the exchanges, it provides them comfort in terms of liquidity. So
Right.
there's
Right.
ample liquidity in terms of being not only being listed on both exchange, but also the demat profile. It will be both on CDSL as well as NSDL.
Okay.
Yeah.
Okay. So great. I think that was very much required by, our viewers and investors to have a look into. So I'll just summarize. Adani Enterprises is coming out with its NCD IPO issuance, which opens from tomorrow. This is tranche of 400 crores, which is base option, and additional 400 crores of green shoe option. So total of 800 crores. This is a care A plus rated positive outlook, and the tenures are 24 months, 36 months, and 60 months. And I think the highest rate that I saw was 9.9%, which is on the 60 month, and the lowest is 9.25 on the 24 month. And these are secured bonds. They are investable via the UPI mode, starting from as low as 10,000, and you can keep investing upwards. So that is the information that viewers should carry back home. I'll move on to the last part, I think, of our conversation, which is more on environmental and social and governance perspectives. So Adani has been at the forefront of this transitioning to green power, right? Which is the thing for the future, right? Gradually, looking ahead into the future. How are you looking at that perspective? And, how do you see the world transforming with respect to these green initiatives? And what role, Adani would like to play in, making that transformation in the ecosystem around?
So, see, from an ESG perspective, we are in the top quartile in terms of various ESG ratings that we have. So, DJSI rates on a base score of 61, and we adjusted for various issues, it has given us a 49 rating, which is still very higher in terms of the quartile, because the average is about 20. So that is one. We are also rated by other rating agencies and the top quartile. We have received certain accolades to that effect. Now, for us, from an environment perspective, we are very cognizant of the fact in the past we incubated the green energy business, that is the renewable business. Now we are incubating the green hydrogen business. So in a way, it will decarbonize a lot of industries over a period of time.
Does that
Uh,
mean that, it will reduce the carbon footprint also?
Yes, yes. So
Right.
today only, like by doing solar manufacturing and wind turbines, we are already taking that step towards that.
Got
Our
it.
airports business are more than 50% fully now working on renewable energy.
Got it.
Our even within the mining services businesses, we are constantly reducing energy intensity, emission standards, and all that. We are also having a lot of tree plantation initiatives at all our businesses. So from an environment perspective, we are already doing what we have to ensure that we are in the top business houses. In terms of social infrastructure also, we are ensuring that not only just our vendors, employees, customers are there are getting the social benefits, but as a community at large also, whether it be our sites where we are working, where we work on a more than 100 sites across the country. So on all of them, we ensure that we are socially responsible. We create the social infrastructure, skill development, education is something which we focus on. And similarly, from a governance standpoint, we are the one of the few companies which has 100% audit committees, where the requirement is about 75%. We are having various subcommittees as well as corporate responsibility committee, which looks at ESG from the perspective of ratings on the environment work that we do, social work, as well as the governance standpoint. So, and it is all comprised of 100% independent directors. So we are ensuring more and more transparency within our governance framework also. So that's how our ESG journey has been, and we continue to improve upon that as we move forward.
Got it. Got it. I think we have got a very good perspective, about Adani Enterprises and exciting opportunity of the upcoming NCD IPOs. So wonderful having this conversation with you, sort of, Pranav, and getting your perspectives. There are a few questions which have been there from the audience. What we will do is we will send it over to you so that some of them are standard technical in nature, which we can answer itself. We can look into the information memorandum and take out the answers. Some of them are more long-termish, more global in nature. So we'll send them over to you so that, to our viewers, then we will share those responses, right?
Sure. Sure.
So thank you for your time.
Thank you. Thank you, Abhijit. Thank you, Pranav.
Thanks.
Thank you.
And
Thank
thank
you,
you to
sir.
all
Thank
our
you, Abhijit.
viewers for being here and being a part of this conversation. Thank you.
And we are
Thank
looking forward to a great participation and a partnership.
Right. Yeah. Looking
Thank
forward
you
to
so
it.
much. Thank you, everyone.
Thank you.
Thank you.